think Ethereum, right? So you have to look at it as the rally from the lows in June. It was about 100+%. And a lot of that was expectation of this merge coming. And really what we see, and we see this with so many stocks as well, is that people buy into these stocks on anticipation of great earnings, and then they report great earnings, and then people are like, okay, well, what's my next reason to own this? I'm up X amount of dollars. Let's sell it. Let's take profits. We'll revisit this in the future. And I think that's what's going on with Ethereum. As much as I love the merge, and I think what it will end up doing will be a positive for Ethereum, it still doesn't solve the immediate issue of the risk and the fear of crypto right now with the Fed being so aggressive. So you're going to see it come down here. I have a major technical level on my chart around $1,250. You can see it just kissed that level right down here coming from this pivot. If it gets through there, you could retest sub 1,000. But ultimately, again, you get down sub 1,000, and I think you start accumulating this for the long term very slowly because it could go lower. But again, you have to think about the thesis with the merge in the long term, but then understand that fear rules the day in the near term. And that's what we're dealing with the Fed right now in the strong dollar.
In today's video we have Gareth Soloway, founder of InTheMoneyStocks.com, with his prediction on impact of regulation of Bitcoin and other cryptocurrency, where other said Fed policy is bad for cryptocurrency. Soloway said regulations is best for cryptocurrency.
We see all the news headlines regarding the regulations that are coming down the road for Bitcoin. Biden coming out saying that it's basically coming sooner than a lot of us suspected. So what does that mean ultimately for the crypto in your opinion, Gareth?
So for the last year plus, I've been really a proponent of regulation. And the reason I am is that as much as we like the deregulation and kind of this independent currency type thing, if you ever expect big money to come in, and I'm talking about pension funds with trillions of dollars, I mean, just them putting 1% of their assets in Bitcoin would be massively positive for the price of Bitcoin. So I'm coming from the investor standpoint where I want to see the price go up. And the only way you're going to get that is if you get a framework of regulation and people actually know the rules, right? So one of the things in the stock market that I've learned over the years of trading is that the market doesn't necessarily care if it's a positive or a negative. They just don't like not knowing, right? They don't like that ability to not figure out what the rules are. So by getting regulation out there, you create a framework where these institutions can say, okay, now we can play in this field. We can play ball because we know the rules and we feel comfortable investing with our fiduciary responsibility other people's money. So I welcome regulation. I think it's needed. You saw over the last 6 months bankruptcies and shady activities and all this, and investors honestly are scared of crypto in many situations. So I think you have to get this regulation.
Bitcoin mining consumes so much energy, that's why White House is planning to ban Bitcoin mining.
For me at all, and mainly because there's too many jobs that have been layered on the crypto side of things with the blockchain and everything else, and there's too many big investors even involved in Bitcoin already where I just do not see that happening. So I think if anything, it's kind of a scare tactic. They're trying to push people to think, oh my goodness, this could happen, and then when they do introduce some stringent regulations, it won't seem so bad. So again, for me, it's a matter of, Biden realizes, and by the way, there's a lot of politicians out there that do invest in Bitcoin and they're big fans of it. These are the politicians that know that they're running up the debt. They know the future of the dollar, and they're big fans of Bitcoin and cryptocurrency. So they're not going to be looking to ban it. And I think you're going to see that the regulation, whether it's a positive or a neutral or a negative, it's still going to allow for the existence of crypto, just with some rules to follow. So I think the key is to understand that for me at least, I think that a digital dollar doesn't really solve the problem of what Bitcoin's solving, and that you have this stated 21 million run. That's the essence of it. So it can't be printed like the digital dollar. In fact, you could argue that the digital dollar can be printed even easier. And I understand what you're saying where, will the government say, oh, we don't want any competition? But I again, I think you have to look at it and say, if I was a politician, I would be looking at Bitcoin and saying, you know what, it's more of a gold. Why? So they're not going to ban gold then, but they're going to ban Bitcoin. But to me, it's a digitalized gold, so I don't see that being a conflict. And I think the key is Ethereum and some of these other altcoins, you're going to start to see regulation that lays a firm framework where they're going to be classified as securities. We know Gary Gensler has said that. And therefore, they're going to have reporting rules. There's going to be strict rules to report. But I think they're going to be treated much more like equities than kind of currencies. And so I think you have Bitcoin as the digital gold, and then you have a lot of these other cryptocurrencies that will have to report and be treated much more like equities.
To the other cryptos, just sticking to the Fed a second. You said the bond markets, though, are calling the Fed's bluff. What do you mean by that?
Yeah, so that's such a great one to look at. And again, we had this major, ridiculously hawkish comments from Jackson Hole, from Jerome Powell just a few weeks ago. And still we've seen these hawkish comments that were kind of, you could argue that they were more hawkish than any comments we had ever heard from the Federal Reserve. We know it spooked the stock market. The stock market declined dramatically. And when I say they're calling the bluff, is that the bond market is made up of the smartest money in the world, right? It's the biggest market. It's the smartest money. And what you can see on this chart of the 10-year yield is that the 10-year is just back to where it was in June. And so what that tells you is that the bond market says, hey, listen, we don't think the Fed is any more hawkish than they were in June at these levels, even in spite of Jerome Powell's ridiculously hawkish commentary just at the Jackson Hole meeting here. So again, for me, that's telling me something. The bond market doesn't believe the Federal Reserve is going to hike rates that much more. I think, again, 75 basis points is probably what you're going to get on Wednesday. And then I think the Fed very possibly could be on hold after that.
If you don't mind now, let's talk a little bit about the US dollar. Curious to get your thoughts about where you think it is headed. Is it taking a pause? Will it continue to march higher? Where does it go from here?
Yeah, so according to my calculations and probabilities on the charts, the dollar's getting ready for a reversal. So again, that would coincide with the potential of a pivot coming up here. And again, I don't want anyone to misconstrue what I'm saying. They're still going to raise 75 basis points on Wednesday. It's about what the commentary is. That's what what's going to move the markets on Wednesday, is what Jerome Powell says in his press conference. So if he even opens the door to kind of a pivot, the market is going to rejoice, the dollar is going to fall. And I do think that you have the midterms coming up, and the Fed likely will sit on the sidelines through the midterms and then reevaluate.
I agree with that.